Hey everybody, good morning. How's it going today? Welcome to a new episode of Stocks for Breakfast. It is Tuesday morning, September 21st, 2021. Want to thank you so much for being here with me today. I really appreciate it. We've got a lot to talk about today. Today, the market is showing a little bit of a bounce. We're actually going to talk about that bounce, what the bounce means, what we're expecting, what we are going to force the stock market to do today before we start to size up in our conviction level. We're actually going to give you a little bit of a peek behind the scenes today in the context of we had our weekly coaching session last night, which is every weeknight at Monday. We actually have a couple of them, but Monday and Wednesday are the primary coaching calls besides the day trading review sessions that we do and the swing trading review sessions. So we have a lot of interaction outside of the market hours. And I really think that's where the best stock picking and the best stock trading questions come when we're not in the market. We could actually have a little bit more, laid back, ask questions without watching quotes go back and forth. So we got a lot of stuff we're going to talk about today. We're obviously going to talk about the FOMC tomorrow, what that means, what we're going to force the SPY to do today, the SPY ETF to do before we get increase in our conviction. We're going to do a deep dive into two different questions that we got last night in our coaching call, because I think it's pretty valuable to share with everybody today. We're also going to talk about this book, one of the many books in the library. And then we're actually going to come back and we're going to talk about some stocks showing relative strength and what we'd be looking at in the market today. So stick around. We'll be back in just 1 second. Okay, so first, obviously, I want to say thank you. Thank you so much for joining me today. We're going to talk about some stock picks. We're going to talk about the market. We're going to fill YouTube up with some goodness. So first, I want to say thank you to everybody this morning. Let's see. Carlos, good morning. Good morning. Good morning. Cecil Lake, how are you? All right. Awesome. John Bates, my 5:30 a.m. Discord partner, where we're fighting to see who could wake up earlier. Let's see. Joe, Fort Myers, Florida. All right. Mike Brattenberg, I answered your question last night. I don't know if you had a chance to see that in the forum. We did a whole review, actually, the whole beginning part of the call, just on your one question last night. It was really good. Let's see. James Daniels, good morning. How's it going? Ross Marshall. Is that one name or two name? I think that's two names, right? And Paul Costa. All right. So I want to respect everybody's time. We have a lot to cover today. So the big question on everybody's mind, buy the dip or not buy the dip? That's the question right now. Oh, by the way, obviously everything we're talking about today is for educational purposes. It's your job to make the final decision. But again, hopefully we're providing enough value that you hit that subscribe button and you come back every day, because we're giving you good stuff that's actionable. And that's actually something we're going to talk about today, is actionable stuff. We're going to do a little bit of a deeper dive into it is two words. Okay. Two names. We're going to do a little bit of a deeper dive into different ways to scan for good ideas. And I know a way that a lot of people buy stocks is you're digging in deep and you're going into moving averages and all that kind of stuff. We do it a little bit different, where we're specifically looking at multiple time frames and using the color of the candles in a way that we're stacking the order flow, I guess is really the best way to put it. However, first, I think what I want to do is we're first going to pull up sector rotation from yesterday. And obviously the image that we're all looking at right now, this was not so pretty in pink yesterday with all that red on the screen. But there's a silver lining. So right now, the big question before we buy stocks is the FOMC announcement that's coming tomorrow, which is obviously on everybody's head right now, is it already priced in to the last 2 weeks of selling? So if we jump on over into the charts and we look at the depth of the pullback, everybody was clearly expecting the 50-period moving average last week on the SPY to hold. It didn't. It got obliterated pretty much in 1 day and then crushed yesterday. I think the selling in the market yesterday took a lot of people by surprise, especially the depth of the selling. However, what we did see, if you happen to not be on the day trading side of things, this rally that we had at the end of the day kind of ruined the best laid plans, because we actually were hoping that the market closed on the low yesterday so that we can actually have one final flush down, look for buying in the buying that we got yesterday. We didn't get it. So what does that mean? That means now we switch to a different entry strategy specifically for day trading today, where we need just a little bit more confirmation. So it's not just the opening price. We're probably going to have a push to the upside. We actually want to see the market hold the bid this morning. So hold the bid. And I'm just going to give you, I want to go into my email from this morning to show you exactly what that means. Let me actually pull it up because it's kind of important, actually. I want to review the context of the email and talk about it. All right, let me just pull that up. Sorry. Here. Okay. So when we're talking about this, and this is the email that we actually sent out this morning, the vicious rally that, let me make that a little bit bigger. The vicious rally that we had yesterday, which is what we're talking about here, that's obviously the good news, okay? So we're seeing that continue this morning. And if you're looking at the E-mini S&P today and we're looking at the futures, we're trying to get a gauge on where the market closed yesterday and where we are now. So you can see we're actually up 30. We were up a little bit higher this morning. And now the question is, what are we looking to see next? And this is what I'm about to tell you is a monster part of trading. It's a monster part of you being the reason that you make money. And you have to have the guts to make a call on what you expect to have happen on the open. We talked about this a lot recently, where a lot of traders kind of passively sit back and say, I'm just going to wait to see what happens in the market, and then I'm going to start to place my trades. That's very passive, and you're essentially taking yourself out of the equation. What you want to do every day is you want to script what you expect. If what you expect happens, you trade conviction and you trade aggressively at your levels, whatever the prices are, whatever the signals are, whatever your strategy is. Obviously, ours is order flow and tape reading. And when the market opens, if it doesn't unfold that way, that's fine. It's not matching the exact criteria. Remember, as a trader looking to have that financial freedom that comes with trading, you need to have conviction in your strategy, which means you need to know what best case scenario is. You need to know it. This is exactly what I'm looking for. And if this happens, I'm going to trade. But then you also have to be okay with being hands off. And that's actually something we're going to talk about in a minute. A huge part. Hey, Lynn Ramirez. Lynn's one of the most valuable people in our community. She's constantly posting during the day and always adds a lot of good energy. So here's the thing. You need to know exactly what you need to see happen. And then if that happens, you need to be perfectly okay. One of the biggest conversations that we've been having in our boot camp, specifically over the last 6 weeks, is the amount of members of the community who are actually excited that they've traded less or managed risk over the last 6 weeks, something they would not have done before. So here's a big thing I want to talk about. Everybody comes on these calls for stock picks. Everybody comes on these calls for trading lessons, right? Give me the thing to do now. I want to start making money. Tell me what I should be doing. Don't discount learning how to not lose money. Learning how to avoid tough situations will keep so much money in your pocket, but then the consequence of that, the positive consequence, if consequence could be positive, is you come out the other side, you didn't dig yourself this giant hole. Hey, Solomon's here. And then all of a sudden the market, maybe like today, maybe the rest of the week, maybe after the FOMC announcement, the market catches a bid, becomes obvious, and you make back $5,000. I'm just throwing a number out there. Obviously, the number is different. So let's say you make $5,000 and you did not dig yourself into a hole the last 6 weeks. And all of a sudden now you turned your entire month around in 1 or 2 days of trading because you were smart. So again, every day we have posted pad moments. You need to write that down. What situations should I be avoiding to become net profitable? It is such a big part. It's not the sexy part of trading, but it's the part of trading where you actually get paid. And if you just think about it, go through your profit and loss statement, think about all the times that you overtraded, wish you didn't overtrade. All of a sudden, the market gets obvious. You make money, and let's all raise our hand. It's not hard to make money when the market's obvious. Let's just all admit that. Okay, when the market's obvious, it's pretty easy to get paid. But getting paid at the end of the month means that certain times during the month, you need to dial it back and be completely okay with that. So learn to run a trading business. So all of this is tying into what we have on the screen here, which is what we discussed and the email that we sent out this morning. At this point, we're looking at the market is short covering. So the rally that we saw yesterday afternoon, this is short covering. So exactly, let me finish actually. So what is short covering? Short covering means people that sold the stock short have to buy it back to get out of it. They realize that the selling stopped. Now, we also called this yesterday in our game plan meeting where we said the market internals shifted dramatically. And if you're looking at short sales, if you bought puts, if you sold stock short, the market changed dramatically. Something happened in one of our market internals. It was confirmed by the other market internal, and we had this vicious rally. So again, getting back into what not to do to get profitable, you pull back on your short sales, you cover your short sales, you don't look for new short sales. And then if you're aggressive and good with the keys, like Fred Grove in our community, you understand when to start looking to be a buyer. So yesterday was short covering rally. So that takes us into what are we looking for today? Again, I want you to have the guts to script your morning, script your entire day, script your entire week. This is what I'm expecting. This is how I plan to trade it. If I get it, I'm going to trade it with absolute conviction. If I don't get it, I'm going to be okay with lowering my position size, maybe taking some cash flow or being in cash. That's how the path to get to net profitable. Now we segue into what we're looking for this morning, which is this. For us to have bullish conviction, and again, this is me scripting out the morning, all right? We need to see the SPY ETF and other major indices hold the bid. We've covered that terminology, hold the bid, quite a bit over the last few weeks. Higher highs, higher lows, close near the high, and on increased volume. So that means that yesterday's buying, which was short covering, is followed up with fresh buying today. So that's getting out of positions. We want to see all of that. So think about what we just said. We just put 4 conditions on the market for us to start having conviction that we just bottomed out after yesterday's big move to the downside. But we also have the FOMC tomorrow. So we got a bunch of stuff going on today and this week. But remember, as the market unfolds, if it does what you scripted, you must trade confidently. You must trade with absolute conviction. But that means that you need to know what you need to see, that's one of the questions we're going to get to today. So the big question heading into tomorrow, has the last 2 weeks of bearish priced action already been priced in to continue the tapering? So I'm looking for new swing trades today, still not loading up on share size until I get positive feedback. So I'd like to ask you to do this right now. Screenshot this. I don't care that you copy it. It's something I want to help you with. Screenshot this, and then we'll move on. Okay. So take a quick screenshot of that. So that's the depth. So I want to challenge you right now. I want to ask you, are you adding that much depth to your ideas? Are you going into the day saying, I'm not doing anything unless I see X, Y, and Z? If I do, I know exactly what I'm going to do and how I'm going to get paid today. If X, Y, and Z does not unfold, I'm okay. Have a little bit more coffee, talk to everybody in the chat, and things will be fine because I'm going to preserve my precious capital until it's time to get paid. That's the difference between trying to be a better chart reader and trying to be a better trader. If you're struggling right now, stop spending all that time looking for the absolute perfect 20 monitor setup. Okay. Pick a strategy. I'd love for you to use my strategy. If you want to learn about that, click below. I'd love to see on the other side. I think we have the best community in the planet. But whatever strategy you decide to use, you need to commit to it. That's the big thing. You absolutely need to commit to it, which actually brings us up to a couple of questions today. So I'm going to take you behind the scenes into one of our questions from yesterday. Okay. So David asked yesterday on our coaching calls. Again, we say we have our coaching calls every night, Monday night, Wednesday night, Tuesday, and Sunday. It's an interesting question, and it kind of ties into what we're talking about right now on knowing what you need to see. Now, the market conditions have absolutely been pretty tough lately, and also thinking about in the context of when to trade. So David's question is, I feel like I'm learning something every day, which I'm grateful for that. That means that our community is doing a really good job in helping David get as much value as possible out of it. That's the goal. Obviously, you make an investment in yourself. You want it to pay for itself, right? So my next biggest hurdle, and that's actually kind of fun type of conversation there, because once you learn something, then that opens up another thing that you need to learn, and then opens up another thing to learn. So David has a larger account, entering new swing trades almost every day. I feel like this is hurting my P&L growth. So tying that into what we just discussed before, it's easy to see that if you're working and trading for excitement, that's the wrong reason to trade. Now, I'm a trading junkie. When I first started trading, I couldn't trade enough. Back in the day, we were actively trading. We'd probably trade 1 million, 1.5 million, 2 million shares per day each. Okay, a firm at one point was trading 500 million shares per month. It was a lot of trading. When you gain a little bit more experience and you really focus on how do I get paid, not what can I do today, it changes, it flips the script. You're now looking for opportunity. But the big thing I want to point out here is this, and we've talked about this in the past, 10 perfect trades, and we put that image up on the screen of the 10 great trades. And if you have an edge over 10 trades, you're going to have losing trades in there. It's when you throw those other trades that don't match your strategy, that's the reason you always feel close, but you never get paid. So the discussion that we had for David last night was all focused around breaking down the market in a way that everything you're looking at, from sector rotation, from the top 3 indices on the daily, the weekly, the monthly time frame, and then drilling deeper into the individual stocks within the individual sectors is where you find those opportunities. So we kind of had this discussion back and forth, and we assessed, obviously, the last 2 weeks is the first time, I think, in 2021 where we had 2 well-offered days like that, 2 big red candlesticks that closed on the lows, and 2 weeks of tough trading. So we kind of gave a super deep dive on game planning, and I hate to use this word, but it's the right word that we use. You get a feeling of whether or not you should be risking money or accepting risk based on the conditions of the market. So if we're looking at the screen and you do your game planning and pretty much nothing looks awesome, then it's really challenging to say to yourself, I really can't wait to take risk today. I really can't wait to put trades on because X, Y, and Z looks amazing. Where did you see that in the market the last couple of weeks? It's been hard to find. Even stocks like BX, which is probably one of the strongest stocks that we've been watching for a while, even BX hasn't really been awesome the last week or two. You can actually see here, it kind of went into a pause, did a rally, and then pulled back again. Oh, actually, let me see that. Can't see the chart. Even this stock right here. So the point that I want to get across is when you're looking at the market and you're breaking it down, at some point, you need to get the pulse of the market to determine whether or not it's the right time to be accepting risk. So that's a big part of it. So just to give you an idea, we get a lot of questions about game planning. And again, I started today talking about before you buy stocks, you need to script out what you expect to happen. That's the game planning process. And I just want to give you some context just so that you have an idea. And this doesn't matter if you're day trading stocks or swing trading stocks. My game planning, I do it every night at 7 o'clock or as close to after the market closes as possible. And then I review it again first thing in the morning with, like with everybody with a cup of coffee, right? My game planning takes at least 90 minutes every night. And that doesn't matter if it's swing trading or day trading. I want to attack the market from as many different angles, as many different scans, as many different charts, make a big list, and then work that list down into the best ideas that I'm finding today. If you're running basic scans and it takes you like maybe 5 or 10 minutes, or you pull up stock twits or whatever it happens to be, and then you're jumping in and looking at stocks, there's no way in the world you're going to have conviction. You want to have absolute conviction that when you hit that buy button, you earned the right for that money that you're about to make, or if you don't make it, you at least made a good decision. You built a good argument. So think about that. Maybe you don't have to be a workaholic like I do or be obsessed with trading, but I think 7:30 in the morning, you're here with me right now. I think that we're all probably a little bit crazy. We love the stock market as much as we do. Ask yourself if you're doing enough game planning to warrant and to deserve to see your account growth go steadily up every single day. So that's the first one that I wanted to discuss. The second one I wanted to discuss was a question from Ted last night, and this is actually a fascinating question. So we're going to bring it up here, and we're going to make it a little bit bigger. Having trouble finding out what I'm missing. Okay, not to be cocky or anything, but I'm aware that I've improved on my screening for stocks. Learned a lot when it comes to finding A+ trades. So again, this is from our Monday night coaching call. All right. The only problem is the improvement has not shown itself in its P&L. I'm planning to go up every single trade and find somewhere. So essentially, two things are happening here. Ted has now gotten to the point where he knows exactly what he's looking at. He stopped the downside of the market. He's got that completely in control, understands what great ideas look like. Now, the next step is seeing the P&L start to move steadily higher. And again, we talk about that all the time. The trader path is first you open an account, you define an edge. Well, hopefully you define an edge first before you open the account. You start to trade, and if you're smart, you do it with less share size so that you don't have that emotional angst on every trade. You make a big list of what doesn't work, and then you obviously now understand what great trades look like. He's scripting out perfectly. Ted's been doing an amazing job for the last 6 months making his game plan. Now the next step is profit taking. The next step is allowing the edge to play itself out. So the conversation that we had with Ted last night was a very important one because he's essentially asking, what question am I not asking? Okay, which is pretty cool because that's higher level of thinking. And isn't that the whole point of wanting to be around mastermind groups, wanting to be a part of communities like this or in the private community? You want to be around people that are thinking at different levels, so you raise your level. Andrew Carnegie, Think and Grow Rich, very famous for that. You see, I got the book back there. Andrew Carnegie was the wealthiest person in the world at one point, and his secret to success was obvious. He literally said, I surround myself with smarter people than me. If you are the smartest person in the room, you're in the wrong room if you want to improve. You absolutely need to elevate yourself. So Ted's question now, getting to the point, is the answer we gave him was you need to allow the probabilities to play out a little bit more. You're probably not taking enough trades that match the strategy, and you're cherry picking the one or two best ideas. So in this case here, we discussed reducing initial position sizing, increasing the amount of trades that match the strategy, and then sizing up and learning how to hold the winners on those other ones. So he's got past the part of managing the downside and understanding the edge. I mean, for somebody to say that I have no problem finding A-plus trades and not to be cocky or anything, that means that Ted is really on top of his game right now, which is pretty exciting. So that's the advice or the suggestions that we made, which is lowering the share size. Don't cherry pick if you have a list of stocks that meet A-plus trades, and then learn to add to those winners and learn to size up. And more importantly, what we use is called the profit maximizer. We have two different profit maximizers. One's a momentum profit maximizer, depending on the market conditions, and the other one is a trend trading profit maximizer if the market conditions are A+ on top of the trading ideas. So we've talked about David talking about overtrading and ways to reduce overtrading. We're talking about Ted to actually trade a little bit more, but with smart position sizing and learning how to use the profit maximizer. The next thing I want to talk about, let's see, John Pena, how are you, pal? Nice to see you. So I want to talk about, let's see, Napoleon Hill wrote Think and Grow Rich. Yeah, I was mentioning Andrew Carnegie because he's so prevalent in Think and Grow Rich. So anyway, I want to touch on one last one here, which is the stop loss. Again, in our private community, we have a tremendous amount of conversations going on during the day at trading, but this is a big lesson, and I'm going to get into the book in a second. We're actually going to finish this on a high note with the book. If you believe that you have what it takes to make money as a stock trader over time, and for everybody, that might be something different. It might be somebody wants to make $2,000 a month, and that's extra cash. It might be somebody that wants to make $2,000 a day, which is also achievable. Everybody's got different goals that you come to the market with, right? I will just flat out tell you this, okay? We talked about this a little bit yesterday. We talked about it when the market got smacked yesterday, and smacked in a big way. Far too many traders, especially those who started after March and April of 2020, when the market started to go parabolic, have only traded in that market. And it makes me shudder when I think of people saying that I don't need to trade with a stop loss. The market always comes back. And I was warning everybody. I was giving you a heads up. This is not the perfect market to do that in right now. And we started to roll over. And some people recently, I'm getting emails from people on YouTube and comments on YouTube, I should have had a stop loss. So I just want to really drill this home, because it's a very big part of our community, which is understanding how to manage the downside so you're around long enough to understand how to make money. You want to replay that. In order to gain experience to understand how to make money, you need to be around long enough to gain that experience. And to be around long enough means you need to respect risk. A part of our bootcamp program, we teach one of the three pillars is risk reversal and understanding how to reverse that risk and manage that risk both mentally and as a trader. But what we talked about and what was in the community yesterday was some really good conversations between Don, myself, and Ranesh about understanding what the stop loss means. Important concept, long-term thinking, take away stop loss, even if they all come in, mitigating risk. So what I want to get across here, and again, this is a pretty bold statement, but it's 100% true. It's not hard to make money when it's obvious. We can all admit that. The market went up for 18 months. Everybody felt like a genius. Everybody felt like, yeah, I know exactly what I'm doing. And that's proof, right? It's proof that when the market's obvious, it's not hard to make money. Ask anybody who's trading crypto in 2017 to 2020, just going vertical, right? Everybody's a crypto genius until it pulls back 50%, right? Long-term thinking is how you make it in this business. It's not about the individual trade. It's not even about the individual day. It's about over sample size. It's about over time. It's about managing risk. It's about asking questions. It's about doing exactly what you're doing right now, which is being on this call and wanting to improve yourself. Our motto in our community is, I want to be better tomorrow than I was today. And just the fact that you're on this call right now shows that you have that burning desire, which actually kind of takes me. So the last thing I want to talk about is this book. Okay. We spent a lot of time today. Actually, so you can see the author's name, Atomic Habits by James Clear. In case you've never heard of this book, it's actually been a New York Times bestseller, I think now for about a year, which is a long, maybe even longer than that, quite honestly. But here's the big thing. Habits. Okay. We've talked about, this book is amazing, by the way. We've spent a lot of time today talking about risk. We've spent a lot of time today about the habit of game planning. We spent a lot of time today talking about the habit of scripting out what you plan to do. And then the habit of actually following what you scripted out and being patient and all that kind of stuff, right? This book, I will tell you, obviously you can see that I'm kind of a self-development junkie. This book, even if you're not a reader, download the Audible. It is life-changing. It really helps you in a systematic, step-by-step way to develop habits that help you. I don't know if there's any other way to put it. Habits are what form everything we do. These little split-second decisions that we don't even realize we're making sometimes either move us towards where we want to be or away. And there's one thing that successful people will absolutely tell you is number one is there's no such thing as you're moving a little forward or a little backwards. It's one or the other. You're either taking action or you're going backwards. There's no other way to put it. Number two, massively successful people take massive action quickly. Massively successful people don't wait for everything to be perfect to start. You start, you get feedback. You start, you get feedback. You start, you get feedback. And whether you buy this book or not, again, I don't get anything from it. I'm just passing along stuff that's helped me, or download the Audible book. I'd love to hear from you in the comments if this book helped you and what habits you think you have in trading right now that you need to change. If I had to say most of the people that are brand new traders, the single biggest habit that needs to be adopted, which is respecting risk. Respecting the downside is everything, okay? Once you respect the downside, then that becomes a habit. You put a stop loss on, you don't move it. You put a stop loss on, you don't move it. The next step is developing the habit of holding good trades longer. And I think we can all raise our hand right now and admit that there's some point where we've had really big, good trades, but we didn't hold it. Holding winning trades is just as much as a systematic habit as the discipline side of getting out of trades that aren't working. So I'm going to challenge you right now. Get out your legal pad, write down, make a big list of the trading habits that are helping you right now and the trading habits you need to work on, and make it a point that immediately, don't wait for the perfect time. Don't wait for tomorrow. Don't do what I do with diets and say, I'm going to start Monday. Start now. Start the very next trade you have and start developing good habits. First on the downside to respect risk, and then the habit of analyzing the market, building a checklist and saying, okay, if I got a good trade, I got this big fish on the hook, what is it going to take for me to make a big win on this one to pay for all those small losses that just annoyed the heck out of me. All right. All right. I just want to take a couple of questions. Let's see. Joseph, good morning. John Pena, as I said, very good to see you here. Jason from New Jersey. All right. So we're going to end this call. Obviously, I want to let you know how grateful I am today. Thank you so much for joining me every day. I just want to give everybody a heads up. We're having a follow-up to the futures trading webinar that we had last week with Jason, Jeffrey, and Caitlin. Click the link below the description. Obviously, it's a free webinar. You can get in there. There's going to be a Q&A session, and they're also going to discuss some new stuff, which is pretty interesting. One of the things that they talk about is how to scoop up $50 and $100 bills trading the E-mini S&Ps and the E-mini NASDAQ. So if you're interested in futures trading as well as stock trading, click the link below and make sure you register for the webinar, which is going to be tomorrow night on Wednesday. So again, hopefully we provided value today. Click that subscribe button. And if you have any follow-up questions, leave a comment below. I'd love to hear from you. And here's the book again. Okay. Have an awesome day, everybody. I'll speak to you soon.